Hey guys, it is Thursday, April 4th. We're almost back to Bitcoin 68,000, and this episode is episode 71, Bitcoin portfolio allocation. So, what are we talking about? I made a little presentation for you guys, and we're talking about creating a long-term portfolio and adding Bitcoin to it. So it's a Bitcoin portfolio allocation talk. So there's really four places when it all gets said and done, four places to park your money. You can put it in cash or bonds. We call that fixed income. You can put it in stocks. You can put it in real estate, or you can put it in Bitcoin. Those are your four choices. Now, let's review each of these and see. And each of these does kind of belong in your portfolio, but let's just talk about each one. The first is cash and bonds. Well, the good news is you now get a little bit over 5% if you put your cash in a money market fund. Now, you may not get 5% in your bank. If you're banking at JP Morgan Chase, you're only going to get 1% or less than 1%. But it's not hard to get 5% in cash. You can get over 5% in treasury bills right now today. If you want to lock it in, you're going to get a little less, but you're still getting over 4% if you want to lock it in for 10 years. I don't think this is a good idea, but you can. The bad news is it's taxable. So if you're in sort of a 40% tax bracket, and these things you could find yourself in one of these brackets, if not even now, but you could find yourself in one in 5, 10 years. You're getting only 3% after tax, right? Because it's just taxed as ordinary income. Now, real inflation is likely to run. I think you need to factor in that you're going to have your inflation run at above 7% going forward. Things are getting more expensive than they are. We're sort of seeing more inflation in the last 10 years than in the previous 10 years or in the previous 20 years. So we're definitely seeing a return to higher rates of inflation. And it may be 10%, it may be 15%, we don't know, right? But I just put in a number like 7% to kind of factor in where your cost of living is going to be. So after 7 years, you're probably going to get, if you're making 3% after tax and your inflation is 7%, you're going to lose about 50% of your purchasing power. That's not great. Now, on the other hand, if something amazing like a great opportunity comes along, yeah, you can use that cash to buy it. But you have to ask yourself, how likely is it some major new amazing opportunities that come your way in the next 10 to 15 years? So that's cash. Next thing is stocks. Now, stocks have done great since 2010. But the reason they did that we've had such an amazing run is that stocks were pretty cheap in 2010, right? We had the great financial crisis, and stocks got really, really cheap in 2010. And then they just ran up, and they ran up partly because they were cheap, but they went cheap to very expensive, right? So now they're on kind of relative to GDP, relative to price earnings or anything else, we're really expensive. We're higher in overvaluation than we were in the stock market peak of March of 2000. So, I think believing that we're kind of there and we're going to have another 10 years of that, I think it's a little bit of wishful thinking. Now, what if we are somewhere like there on a bigger picture, and we go from 87% to 32%, or we go from here to all the way down to here? We could actually have stocks go down in the next 15 years. Now, I just would like to reiterate that people thought in Japan prior to 1990 that stocks could never go down. They went up 300 times from 1950 to 1990. It just felt like stocks would never go down. Well, guess what? They went down, and they went down for several decades. They actually just overtook their 1990 peak, last month. So stocks can go down. They're not risk free. You cannot be guaranteed that the stock, movement that we've had is there. Still, I do think they belong in your portfolio a little bit. You can own some stocks. I do. Now, we get to real estate. Well, real estate, as they say, depends on location, location, and location. If you happen to have real estate in the prime area of Mumbai, and I wouldn't even know where that is, but in a fast-growing market like India, maybe that's a great buy, right? On the other hand, if you own San Francisco real estate, what used to be the beautiful city by the bay is now a zombie apocalypse. So, and by every metric, these home prices are overvalued right now. So, this is just one kind of metric that people use. But look, we're in the overvalued kind of section, and we could even come down to the undervalued here kind of range, like we were in 2011, et cetera. So, can we get to undervalued levels of home prices? Yeah. So, we have a lot of potential reasons for that. If interest rates stay high or go higher, it's going to be really hard for people to pay these kind of nosebleed mortgage rates to stay. And we also have this problem of millennials no longer want to park their money in like McMansions and so on. So, while I think it's nice to own your own home, I certainly enjoy it. I don't want to be renting right now, personally. But, if I was younger and I was, trying to build a portfolio in nest egg, I would probably rent right now. So, real estate, and if you want to just buy, rental real estates and just rent them out, go right ahead. But again, it depends on your location, where you are. I don't think that's going to be such a great idea in places like San Francisco, but you do your own thing. Now, let's go to Bitcoin. Well, Bitcoin, we have this great power law that Giovanni found, and you can kind of verify it for yourself. But basically, Bitcoin is been growing on this adoption curve, and we're early in this curve. There's all indications this curve's going to continue for the next 10 years, and if it does, kind of and we're kind of like, we're not overvalued here or even undervalued, nothing. We're just kind of right in the middle of the curve. So if you push come to shove and you said, will we go to $1 million in 10 years? I would say probably, in Bitcoin. Now, there's going to be lots of ups and downs, like the last down from 2020, November to early till January 2023. That was a really rough ride down. There will be rough rides down, but this asset has the potential to go up 14x from here to go to $1 million, which would be 10x after taxes. So, should you be parking all your money? Probably not, because you're going to need to you're going to have expenses, and you're going to need to have whatever you do put in. You're going to need to be able to hold it, hodl it, hold on for dear life for the next 10 years. So, that brings us to the final slide. How much Bitcoin should you have? I think there's two things. I think it depends on your temperament and your need for cash. I don't think really it actually depends on your age, because if you've got 10 good years in front of you, it's enough, that you should be able to get to Bitcoin $1 million. Now, if you have balls of steel and you don't need the cash, and for example, you've got a pension, you've got a job, you've got, rental real estate that you're not planning on selling, whatever. If you've got some emergency funds, having 50 to 100% of Bitcoin might be a good number. On the other hand, if you're completely risk averse and you've got some medical condition, your wife's sick, your child has early stage leukemia or something, you might need the cash, right? So you don't want to be selling all your Bitcoin at the next crash market. So you need the ability to hodl. I would say maybe at the low end, 10% of your money into Bitcoin. So there we have some kind of range. 10% on the low end, 50+% on the high end. That's kind of how I would look at this thing. There's a lot of people who would pick different numbers. Honestly, I don't think there's anything more to it than what I just put it out there. But I hope this has been somewhat useful. And that's episode 71. I will catch you on the next episode.